I mean, you raise a very good point. I mean, just recently, oil prices have started to back up on Russian cutbacks in supply. Also, I mean, another area to be watching now is the food prices in the wake of the grain deal having been jettisoned. So there is a risk that both energy and food prices bounce back, and particularly if, global growth itself starts to hold up, because central banks, talk about getting to the end of the rate rise cycle. So if global growth holds up and we get these cutbacks in supply in these areas, I mean, the absolute pain trade would be a rebound in headline inflation and central banks having to become hawkish again. We've been global markets have been rallying since late October on the hopes of a soft landing, and the pain trade has been those expecting a recession that never happened. So just when everybody gets on the soft landing train, if headline inflation starts bouncing back up again, then that could be the pain trade, both in the bond and the equity market. So certainly, look, it's not my base case, but I am noting the fact that oil prices and to some extent food prices are starting to back up, and it certainly bears watching.
And in a global context, give us your base case macro perspective when you factor in what's happening in China and when you factor in what's happening in Europe.
Look, my base case is I think we can avoid recession now. For up until maybe 3 months or so, I had been expecting the Fed would need to push the economy into recession, the US economy, and where the US goes, many follow. But I definitely have been heartened by the easing of core inflation in the US and some easing in wage inflation as well. I mean, one thing we haven't mentioned, which I think is absolutely critical to the outlook, is whether or not US wages inflation, which is still stubbornly high, can continue to come down as the labour supply in the US actually starts to bounce back, immigration bouncing back, labour force participation bouncing back. So the degree of labour shortages in the US narrowing. Now, if wage inflation continues to ease without unemployment going up, then again, subject to what I just said about energy and food prices, all of the other concerns about inflation really start to go away. So I think Europe I think Europe is sort of doing okay. I think it's getting on top of its inflation problem slowly. But the big issue globally for everyone is ultimately the US economy. Just on China, clearly its recovery has been disappointing of late. And I think China is basically reconciling itself to the fact that, it can no longer be the growth engine of the world. It's got a debt overhang. It's got slowing population growth. And so it really needs to have more manageable growth going forward.